Hi guys, Brand Asset Management here, and today I'm looking at Lockheed Martin, ticker symbol LMT, using my 7 simple steps. Stick around to see my valuations of Lockheed and if I think it's a buy still in 2021. But first, let's have a look at the stock price over the last year. This time last year it was around $402 a share, hit a 52-week low in the pandemic of $266 a share, rebounded pretty strongly and then eventually hitting its all-time high at $417 a share, and has been pretty up and down and is now on a bit of a downward trend with the current share price at $330 a share. The market cap is currently 92 billion, so let's have a look at my steps. Step 1 is the P ratio less than the market, and the current market is 21.5 and Lockheed Martin's P ratio is 14, so as a pass there, they're less than the market. Second step is it less than the sector, and the current sector of Lockheed Martin is industrials, and that has a P ratio of 42.5, so the second step is passed as they currently have 14. Now on to step 3 is the revenue increased over the last 5 years, and the revenue has gone from 47.29 billion to 65.4 billion, so there's a check there as the revenue's increased over the last 5 years. Now on to profit, has that increased, and it's gone from 3.66 billion and nearly doubled to 6.9 billion, so another check mark there. It's looking good for Lockheed. Just as we head over the balance sheet, I just want to say thank you guys for watching. Give a like if you've enjoyed the video, leave a comment on your thoughts, and consider subscribing if you enjoy investing and stock analysis videos. Now on to step 5, are the shares outstanding decreasing, and the shares have gone from 289 million to 279 million, so that's another check mark there as they're buying back their shares. Now on to step 6, are the current assets greater than the current liabilities, and the current assets of Lockheed are just over 19 billion, whereas their current liabilities are just under 14 billion, so there's a check mark there. They can pay off all their liabilities with their assets. And just looking at the total liabilities, it's about 44 billion, so they can pay just under half. So I'm not giving them an extra check mark, but they'll still have a check mark for that. Now to look at the final step is the free cash flow increasing over the last 5 years. And to get the free cash flow, we take cash from operating activities minus capital expenditures. So 5 years ago, the free cash flow was 4.13 billion, and that has increased to 6.41 billion. So there's a check mark again as their free cash flow has increased, and that means they've passed all 7 steps. That's great news for Lockheed Martin. It's looking like a good stock based off these steps. If we get an average of the free cash flows over the last 5 years, which is 4.13, 5.3, 1.86, I just have to say quickly here, I think this number is lower due to the pension increases that they did in 2018. I believe it was about $5 billion, so this number is a little bit lower. 5.83 and 641, which gives us an average free cash flow of 4.7 billion, but I think that would be slightly higher as 2018 would be normally higher under normal years. So we want to look at the free cash flow yields and ratios here. So the free cash flow yield will be the free cash flow divided by the enterprise value, and the enterprise value is the market cap plus the debt minus cash and cash equivalents. That gives an enterprise value of 104.17 billion, and with a free cash flow of 6.41 billion, that gives us a free cash flow yield of 6.12%, and that gives a free cash flow ratio of 16.34. So that looks really good for Lockheed Martin. Really, we want to be looking at multiple ratios of 20 to 25. My sweet spot of a free cash yield is anywhere from 3 to 5%, so that's looking really good for Lockheed Martin. Lockheed Martin does pay quite a sizable dividend at 2.87%. That's an annual dividend of around $9.08 a share. This data here is old as February 26 was in the past, so if you bought your shares before then, you would have received at $2.06 a share, but the next dividend date will be in May time based on their prior years. Also, they have a safe dividend, as the dividend is around 2.9 billion and they have over 6 billion in free cash flow, so there's no issues with them paying this out. Now to quickly have a look at the analyst ratings, and Refinitiv has it as a buy with 14 buying and 9 holding, with an average target price of $411 a share, and at the high side of 450, so Refinitiv are quite bullish. And looking at tip ranks, they have it as a moderate buy with an average target price of $406 a share and a high at $445 a share, so very bullish from the analysts. And quickly jumping to Simply Wall Street, they have it a fair value of $505 a share, so that's 36% undervalued. So the analysts do look as if this is still a buy, even in its current downtrend. So to quickly summarize the steps, the PE ratio was less than the market with 14 to 21.5, pass. The PE ratio was less than the sector industrials with 14 to 42.5, another pass. Revenue had increased from 47 billion to 65 billion. Profit has also increased from 3.6 billion to 6.89 billion. Lockheed are buying back their shares with 289 million to 279 million. Current assets can easily pay off their current liabilities with 19.38 billion to 13.93 billion, and the free cash flow has gone from 4.13 billion to 6.41 billion. So that is 7 passes out of the 7 steps. So that's really good news for Lockheed. And remember, their free cash flow yield is around 6%, which gives us a ratio of 16. So they're very good yields and ratios. And heading over to my valuations, the first is a discounted free cash flow analysis, and the other one is using the Buffer-Graham intrinsic value. And based on discounted free cash flow, it's actually trading at a 92% discount with a fair value stock price of $636. That does seem a little high to me, but I am bullish on the stock. I think Lockheed is definitely undervalued. But if you look at the Buffer-Graham value, they actually have it at a fair price, current where it is with $285 and a Graham price of $214. So I think they are a little bit worried about the growth using these numbers, but I am closer to the discounted free cash flow value. I think it is a buy at its current price, even with its current downturn, and I think it has potential growth in the future. US defense has always been strong, and just for example, in August they had a 62 billion sale of the F-16, so they've got plenty of cash coming in over the next couple of years. So I do think Lockheed Martin is a buy at its current price, even though in its current downtrend, I think either buy right now, or if you think you can hold out for a bit longer and hope it doesn't do a rebound, I would say even do that. So I'll be waiting to see if it goes down a little bit more, but then buying at the first opportunity. Just quickly going through some of the technicals here, I have a 50-day moving average in blue and a 200-day moving average in grey. It has been pretty all over the place. You can see the 50-day has provided some resistance, but more recently it did cross over and has gone below it. So these would be very bearish signs. And also the 200-day and 50-day moving average are diverging here, so that would be another bearish signal. Ideally what we would like is the price to break through the 50-day and then break through the 200-day. If it did that, there would be buy signals from the technicals, but right now there are a lot of bearish signs. There's a death cross there, a death cross here, and also the price is currently below both those averages. So this is a very negative trend. There are ways to trade this in negative. I mean, these could be signals for shorting the stocks and things like that, but I am more interested in buying stocks, so I'd be looking at positive and bullish signals. Right guys, I want to thank you all for watching. Please leave a like if you enjoyed the video, give your comments on your thought on Lockheed Martin and if you still think it's a buy, and consider subscribing if you enjoy investing in stock analysis videos, and I'll catch you guys next time.